Critical illness insurance policies. What are they? And what are 3 reasons why you should consider adding this to your financial protection? Hey friends, welcome back to the channel. And this video is one of those fundamental ones in understanding the basics with insurance protection. Critical illness policies are insurance policies that specifically deal with dread diseases, meaning that if these diseases are not cured or not treated, they can eventually lead to death. In other words, critical illnesses are very serious, but are generally curable through intensive medical treatment, which basically means you have to throw a lot of money at it. Cancers, heart attacks, stroke, organ failures, nervous system illnesses, etc. These are all types of critical illnesses. So generally expect about 150 to about 180 of these critical illnesses to be included and covered under an insurance policy. And every year they sort of adjust it, maybe add 1 or 2 more due to new research and new findings and new statistics. We purchase critical illness policies because we want to manage the risk to questions such as, who's going to take care of my family if I have a dread disease? What is your current income and how large is your emergency fund? What is the state of your financial debts? And I find this one particularly interesting simply because you're not dead. And if you are dead, normally the life insurance payouts are generally quite large. 5-6 times your yearly salary, for example. But you're not, and therefore critical illness actually has to come into play and actually fill that void if you cannot work anymore to help your financial obligations. So the key point is, financially, how long can you last for? These are some of the questions we need to address when considering a critical illness policy. But before we get into reasons why we should purchase a critical illness plan, we actually must first address what's sort of commonly misunderstood between a critical illness plan and a medical plan. They're actually 2 different things. Medical plans are a pay and claim procedure, meaning that you get the hospital bill, you pay it first, and then you claim back that amount or a portion, whatever you're entitled to, from the insurer. Now, granted, you might be on a company medical, in which case the company would pay this for you and then claim back from their own insurance companies because they have company medical has also an insurer. Now, for a critical illness plan, it's basically a lump sum payout, provided you're diagnosed with one of those diseases. A portion of the sum insured, or what we call the protection amount, is allocated to you right away. And so this money can be used for various purposes. But this is a lump sum payout versus a medical, which is a pay and claim procedure. So what are some of the running costs? Well, for medical policies, as we age, the premiums get more and more with each year. This is what we call term insurance as well, because if we don't renew that year, we don't have any coverage. Now, for critical illness, there's also term insurance. This is generally linked to one's employment. For example, a company may give you a medical package, which includes medical, critical illness, travel insurance, accident insurance. It's linked to your employment, so if you're not employed, you don't get the benefit. So we're actually focused on critical illness as a whole life insurance, which means you can actually pay it off and take this policy and let it grow into your senior years. And for example, you can actually pay these policies off. What you do is you select a sum insured protection amount, say 200,000, 100,000 US as a sum insured protection amount, and then you can pay it off in 5 years, 10 years, 15, 20, 25 years. So that's the difference between a whole life plan, which you actually own, has cash value, and a term life plan, which does not. So furthermore, they're actually not interchangeable, meaning that they actually serve different purposes. And ideally, you want to have a combination of both because they're 2 different products for that reason. For example, if you have a very small medical, call it $50,000 US in terms of coverage each year that you can claim from. Well, if you have one of these dread diseases, chances are you're going to be spending much more than that, simply because of the cost of trying to fix you. So if you had a critical illness plan, it will be able to top up those costs for you. On the other hand, if you had a very large medical plan, for example, coverage of 2 million US that you can claim from each year, this actually becomes very expensive during your senior years to maintain, versus a critical illness policy can actually be paid off perhaps in 20 years, and you can always have that reserve, which actually grows as well for you in your senior years. So you could actually reduce maybe the coverage of this medical plan, as an example. So in short, the purpose of a medical plan is different to a critical illness plan. A medical plan is there for you to get fixed. It's there to be used with the maximum amount of leverage, the smallest amount of annual fees for you to get fixed and claim from. A critical illness plan is different because it's basically a reserve for you to either top up where your medical plan is insufficient. For example, if your medical plan is very small, or if you needed additional things outside the scope of your medical plan, different machines, different assistance from nurses, people to attend to you. But it's also there to make you comfortable knowing that if you don't have your job and you still have financial commitments, you can still fulfill them to a certain extent. So here are the 3 reasons why I think you should purchase a critical illness plan. Reason number 1, efficient cash payout. Once you're diagnosed with one of these dread diseases, cash is paid to you. For example, if you are diagnosed cancer, generally 100% of the sum insured, which is basically the protection amount that you've chosen, is paid out to you. Now, for example, if that's 200,000 US, that's paid out to you so that you can settle all your other financial obligations basically right away. And for example, if we have a group 5, like a loss of speech, major burns, for example, 20% of the sum insured protection amount is paid out to you. As an example, it could be 30, it could be 15, it depends on the insurer. So right away, once again, you have money to use to deal with different obligations, or basically making yourself more comfortable. And not only that, there's actually multiple payouts. So for example, if you have cancer, you get treated, you get paid out, you get treated, you get better, and then let's say a year later or 2 years later it comes back, well, they'll pay you again. And maybe even a 3rd time or a 4th time. The plans keep changing these days, so you have to check with your plan, but basically there are multiple payouts. That's generally the theme of these critical illness plans. So reason number 2 is cash value and leverage. For leverage, basically when we want to purchase one of these critical illness plans, we get to choose 5 years, 10 years, even 25 years. For example, if I chose 25 years to buy a certain protection amount, well, in the first year, I'm paying a very small amount only to obtain a very large protection. So that's where the leverage comes in, and I really like that. The second part, and which is actually very important, is actually it has a lot of cash value. So this means that it's not term insurance. It's not money gone into, the ditch, so to speak. It's money where it's built up over years, and this protection amount is there for you. Even after you've paid it off, it will continue to grow and be serving you as a reserve, and the protection amount remains unchanged. So if we have a look at an example of a 22-year-old, in this case, age next birthday is 23. Let's say this person has just finished university and has come and started a critical illness plan that is spread over 20 years. So it's a 20-year pay, and the initial sum insured is $100,000. So this is the protection amount. This is what he or she can claim from if there's a dread disease. And the cost of this is $2,453. So as you can see with this illustration, at the end of year 1, total premiums paid is $2,453. There's a death benefit, obviously, of $175,000. Now, this is a multiple of the sum insured, which is the protection amount. And at any time during this time, if something comes up, he or she can claim from the sum insured, which is $100,000. Now, as the policy goes along, you have a guaranteed cash value, non-guaranteed. That's basically the money that is there, that's invested. It builds up and you get a bit of a return on it. But for this, the break even is actually quite long. It's actually, if you are looking at the 18th year, the total premiums paid is about 44,154. And the surrender benefit, if he or she chooses after 18 years to say, yeah, I don't need it anymore, he or she would roughly only get back about 43,000. So roughly around the 18th, 19th year, this policy breaks even. But it's not meant for that purpose. It's not meant to be an investment product. It's meant for leverage and protection because this is actually cash value. This surrender benefit is basically the cash value that is the residual amount of money that is in the policy that can be used for any purpose, if not for critical illness claims. So let's fast forward a little bit more. At end of year 30, which this person is now 52, there's $110,701 roughly, if he or she was to surrender it, that they would get. And let's fast forward to 40. So as this person nears retirement, age 62, there's 200,000 US to be taken. And so as one, builds up their assets through their working life, the significance of this critical illness plan may or may not gradually decrease because your assets and your reserve, for that matter, gets larger and larger. So this can actually be used for reason number 3, which is multi-use. And that basically means that if you're healthy and you don't need this, let's say you're coming to the end of your life and you actually want to do something with this lump sum of money, go on a vacation, renovate the house, you can actually not use it for a critical illness purpose and just take that money, that surrender value, and cash it out and use it for something else. So my conclusion basically is that if you have a medical, chances are the medical will be able to fix you. But the key is if that medical limits are exhausted, let's say in the same year, and you had to do another procedure, are you covered? Well, this is where a critical illness plan can help out. Based on all the several other reasons that I've said, I've found that roughly about 1 million Hong Kong or about 130,000 US is what I've done for my family as a good benefit cost trade-off, because there's multiple claims, certain features of these products that actually add a lot of value. And apart from the amount, you want to drag it out for the longest amount of time, 20 years, 25 years, to keep the running costs low, such that you get the largest leverage and the lowest running costs. And the third and last tip I'd give you is basically purchase at the youngest age you can, because it's based on your age and you lock that in at that price for 20-25 years. So you must start early to make this a really good deal. And going back to the example of the student who just finished university, 22 years old, purchasing a $100,000 US coverage, the cost was only $2,500 per year for 20 years. The same plan for a 40-year-old would cost $4,000 US a year for 20 years. So I think there's a pretty good case for why you would want to add a critical illness plan to your financial protection. The money's not wasted if you don't have a claim. In fact, that's probably what you want because you don't want to have critical illnesses. But the cash reserve basically builds up and allows for a lot of financial planning and flexibility later in life as well. In fact, you could even start one of these policies for your child, and after they finish university and start working, transfer ownership to them such that they pay the yearly premiums, and now they have a really large reserve to be used as well. And that's it for this video. If you're interested in complementing this critical illness plan with a medical plan, please check out this video on the medical plan that I chose for my needs. Thank you very much for watching, and I'll see you in the next one.